All right, folks, happy Friday, January 12th, 2024. This year is already off to an incredible start, a historic week with the rollout of the spot Bitcoin ETFs turning out to be somewhat of a flop. And as we predicted, as we put out all the warnings, now we are rolling back over. And at the time of this recording, which is about 12:30 Mountain Standard Time, we are looking at a $43,000 Bitcoin after going all the way up to 49,000. Everyone's having a good time, cheerleading Bitcoin and Wall Street coming on in, right? And this is the setup that we were warning about, back down to 43,000 as we record this update. And we got a full update, so much to catch up on. And as I titled this session, we actually just saw Ripple conduct another buyback of the equity shares that are only available on the private market. I do have the link for link to down below. I don't think that Ripple is actually available right now. But check the link down below. If you use my link for link to, you will get $500 towards your first investment. So if you're new, you haven't done any private equity investing with link to, use that link on down below and you will get $500 towards your first investment. Take a look and see if they have Ripple right now. I don't think that they do last time I checked. And then also be ready because they sent an email out to me this morning saying that Circle is going to be back on their platform here soon. And we just got the news yesterday that Circle is looking to go IPO this year. I believe they actually have filed the paperwork for the S1 paperwork to actually file and go public. So the process is underway. Now we can get access to private equity through Link2. Huge shout out to them. And the reason why I have that link on down below is just so that you guys can take advantage of that $500 towards their platform in your first investment. So with that being said, guys, let's get caught up. I am coming live from Wifey's laptop. So I know I'm in the kitchen right now in our Airbnb. We're on vacation right now. My apologies. We've been traveling over the last like 24 hours, so I haven't been able to put out much content. But nonetheless, we're coming here from the laptop so I can show you guys the charts, some of the articles that I'm looking at, and we can provide a full update for you guys here today. So I apologize once again. My production right now on vacation, not the best, but let's rock and roll. So right on into it, guys. Let's get this session started. We're taking a look at the charts. And right here we have Bitcoin, like I said, back down to 43,600 at the time of this recording, but we did wick down all the way to 43,264 so far. So a major sell-off after achieving about a $49,000 price for Bitcoin, back down to 43,000. Incredible. But this is what we warned about, right? And for Ethereum, it's been a pump based off of the expectation, speculation, and the fact that we actually already do have multiple spot Ethereum ETFs that have been filed, and now we are waiting for their approval. Now, my bet on whether they get passed or not, I think that they're going to definitely get delayed further, and I would not be surprised to see those get denied because they do not have legal clarity like our favorite cryptocurrency XRP, or at least my favorite crypto XRP, right? And XRP back down to 57 cents after wicking down to about the 56-cent range. So this is why we were warning our community. It's not because I want folks to lose money. It's not because I want to see Bitcoin crash. I want our community to be tapped in and prepared so that we can go buy the dip when it does come through. You know, a lot of folks, aren't ready. They get caught off guard during these liquidation moments. And over the past few years, we've actually been able to point these out and we've been able to find these moments. We've been able to prepare our community. If you're in a position like Bitcoin, sell off, take your profits, get off the trading floor and stack your chips off to the side so that we can go acquire more of these suppressed positions in XRP and other cryptocurrencies. But let's keep it rocking and rolling, guys. We got a lot to cover here in today's update. Nothing else really noteworthy on the charts, I don't believe, other than we did see gold is back up today. So back up for gold and back down for Bitcoin. Now, Nvidia has gone up to a new all-time high. 546 is where we're at right now for Nvidia. And the market will be closing down here in just a couple hours. So final couple hours of trading, and then our market will be shut down. And once again, the S&P, what was back above 4,800, and so very close from that all-time high. just approaching it rather quickly here, and the Dow Jones, everything has been up to start this year. Okay, so we'll continue to watch that one, and I wanted to get right on into it. So here we go. So today we got the PPI, and yesterday we got the CPI. And part of our analysis, understanding, the gas prices had come down and the dollar had strengthened, which had brought our CPI inflation down, right? Now we're starting to see the oil prices are rallying by nearly 3% after U.S. leads strikes against Yemen over Red Sea attacks. So we've been sending in fighters and we've been launching in attacks right now on Yemen, going after the Houthi rebels. And this is leading to a surge in gold and leading to a surge in oil. And the reason why this is so important, folks, is because this is what leads to further inflation, right? When you look at the inputs and when they come up with these data points, the dollar had been going up, right, all through last year, and that's why inflation was able to come back down, and they were able to get it back down to 3.1%, which is still a long ways away from their 2% target. But nonetheless, you're starting to see now that oil is going back up, and this next data point that I'm going to show you makes me even more firm in my belief that inflation is about to rip back up to the upside, and also watch out for supply chain disruptions as well. And this is what I'm talking about right here, folks. Red Sea transit volume has already fallen off to a level that we haven't seen since after COVID. And so this is just a precursor, once again, to that inflation coming, ripping back. And we're just going to continue to watch this. And like I said, we take a look at the economic data that we got yesterday. CPI is at 3.4%, and the expectations were 3.2%. So a big miss from the expectations, and the market's still cutting in, I think 6 or 7 rate cuts beginning in March. And that is, in my opinion, completely delusional. And the only way that we get significant rate cuts is if we get black swan, if we get the bomb going off, whether that's in the financial system, whether that's in World War III, maybe a little bit of both. That's what we're watching in real time right now. That would be the reason for them to actually drop rates, because based off of inflation and managing the business cycle is the two, objectives that they're trying to achieve. They're acting like they've won the fight against inflation, but as we're, looking at their own data, we can see that it's ticking back up. And we know that now they're saying that they've beat inflation, so now they just need to manage the business cycle, which means, bringing rates down a little bit to relieve all the businesses that are struggling. I actually just was reading into a study yesterday that was put out. 41% of small businesses are late or can't pay their rent at all. So the liquidity crisis is here, and it's all the way down from the very bottom of small businesses all the way up to the corporate level, all the way up to the central banks around the world holding record losses, actually. And 41% of small businesses, these are the small businesses that drive our economy. This is where most people are employed through. And I'm going to show you guys other major layoffs that are taking place right now as well. A little bit concerning. But CPI comes in at 3.4%, way above expectations. How can they cut rates if the inflation's coming back up, right? That's the main question. And then core CPI year over year came in at 3.9. The expectations were for 3.8%. And so once again, the core, which is the one that they're really trying to get down here to 2%, we're still a long ways away by both metrics. CPI at 3.4 and core CPI at 3.9, still a long ways away from that 2% target. Now, PP producer price index came in today, and it was down. And so this is 3 months in a row now that the PPI has been down. Wholesale inflation falls for the 3rd month in a row. But once again, is this going to be reflected in any of the consumer prices? Probably not, because these businesses are already getting squeezed out. 41% of small businesses are already late or delinquent on their rent, right? So as far as the wholesale producers, okay, it's ticked down like slightly, but you look at the rate of inflation over the past few years. That's why we're in our current predicament with real inflation data so high. Now, the Cabesi letter adding a little bit more insight right here, folks. Check this one out right here. So this is some of the data points that go into that CPI calculation, right, at 3.4%. But when you look at car insurance, it's at 20%. And this, just reiterates my point that I've been making, that anything that matters, to really feed the family or for car insurance, stuff like that, that's real necessities, the real inflation's 10 to 20% or more. So car insurance at 20%, transportation inflation at 10, car repair at 7, rent inflation at 6.5, homeowner inflation at 6.3, hospital services 5.5, food away from home 5.2, and both core CPI and headline CPI came in hotter than expectations. This is the first time since February 2023 that both readings were higher than expected. For the first time since September 2023, CPI inflation is back on the rise. Affordability is still getting worse. So, once again, how is the Fed going to come in and cut rates unless the bomb has gone off, whether that's in the banking crisis, World War III, or all of the above, right? That is going to be the only reason or excuse that can actually give the Fed a legitimate reason to come in and cut rates. Now, as far as the layoffs that I was talking about, folks, this is absolutely major coming out this morning. This is Citigroup announcing another round of layoffs. Remember, they've already been laying off quite a few of their people. But now this one coming out today, Citi to cut 20,000 roles in Fraser's bid to boost returns. This is their new CEO that's, taking everyone to the chopping block. Fixed income trading revenue reaches 5-year low in quarter. And remember, they actually removed their, municipality bonds, right? They totally closed that program down completely. And we know that they're holding record losses with their long-term securities. Citi to take $1 billion in severance overhaul costs in 2024. So they're going to have to pay about $1 billion out to these people in their severance packages. But this is part of a plan to save as much as $2.5 billion as their new CEO Jane Fraser's quest to boost Wall Street's giant lagging returns. And the expenses are expected to drop to a range of $51 billion to $53 billion over the median term, Citigroup said. Okay. So we'll see if this is able to save Citigroup. But once again, folks, what part of this is a soft landing? Absolutely no part of it. And the Fed's trying to say that the soft landing has been achieved. Bidenomics is fantastic. Inflation is back down. Now we're just going to manage the business cycle. Once again, I've been saying that the Fed doesn't come in and save the day until people are bleeding out in the streets. That article reflects that. This is not, although we have achieved a record amount of homelessness, and obviously for the poor and the middle class, they're struggling the most. And the ability to actually build wealth during this time is going to be difficult when folks are just having to pay so much for their everyday basic necessities. But this is a white collar recession that's coming in with Citi laying off 20,000 high paying jobs, right? This is a significant concern for the broader economy as a whole, and why we've talked about building out a side hustle, making sure that we're self-reliant. If you work at a big corporation like a Citigroup or something like that, you might have a great job. You might have a great program where they match your 401k. That's great. Take advantage of that. But at the same time, hedge. It's just like all of investments. Everybody talks about having a hedge against the investments that you've made, kind of an insurance policy. Same thing with your income. Do not rely on one source of income is all I can really, recommend for folks. Right now during this turbulent time, you're going to need additional money anyways. So I've been saying whether or not, you can even make it to investments, hopefully, and God willing, you can. That's the goal, is to stack up enough that we have excess savings to deploy that capital towards investments and buying assets. But at the very bare minimum, I mean, you guys know the deal when you take the family out to eat, when you go to pay the bills. Like I said, anything that matters. Real inflation's running more like 10 to 20% on anything that matters. Now, folks, talk about a historical week. Check out this one right here from our good friend Michael Silver Squeeze on Twitter. COMEX registered gold drops 877,000 ounces in one day, the largest drop ever recorded. Folks, we've been talking about this. It is here. They are cleaning out the vaults for silver. I went back yesterday because I retweeted this out and I wanted to give everyone an update on the silver deficit. So the expectations right now from the Silver Institute, the estimates, I don't think that they have the final numbers yet. That's going to come in. But the estimates right now is that we're going to be running another deficit of 141 million ounces for 2023. And this comes after we ran a deficit of 237 million ounces in 2022, right? And then in 2021, we ran a deficit as well. I don't have the number off the top of my head, but that's 3 years in a row of running a deficit for silver. You guys know on the chart, silver looks like it's ready to play catch up in a major way. Gold already starting that. Today we see gold up about $30, while oil's also up and Bitcoin falling off. So I think that the crypto market's reacting faster to kind of the news and this event. It was more of a dramatic run up, and it's going to be more of a dramatic sell off for cryptocurrencies because they just move faster compared to the stocks, which are still at all-time high levels. Literally almost achieved a new all-time high for the S&P today, with everything going on, with all these numbers and data points that I have to share with you guys. Where's the stock market at? All-time high. It's absolute absurd, and it's not going to last forever. So please prepare accordingly. And we can see that the central banks are preparing accordingly because in the last quarter, they stacked 44 tons of gold. They're buying more gold than they have in 50 plus years. We just had the largest drawdown at the COMEX that's ever been recorded. Now, if you've been watching the silver COMEX, they've been stuffing that thing back full because they're struggling to keep it filled up. They've been stuffing it back full. And earlier this week, we did get a drawdown. I think it was over 1 million ounces. Maybe it was a couple million in one day. So, I mean, they're stuffing in hundreds of thousands of ounces. In a couple of days, they've actually put back over 1 million, I believe. But they can't keep up because we're just having historical drawdowns at the COMEX. And this is for silver and now for gold as well. So just love to see it. But as I titled this video, folks, I wanted to talk about Ripple buying back their shares. Very exciting. We've been talking about, obviously, buyback's a bad word, right? Nobody say buyback, right? And obviously that's in relations to the XRP buyback, right? We're not going to talk about that in this video, even though Ripple has been buying back a significant amount of XRP to manage their on-demand liquidity volumes and flows, and just managing that liquidity for ODL. They've been buying back a significant amount of XRP. Facts. But now we see here today they are buying back equity, and I believe that what they're doing right now is they were able to buy back at a significant discount. I really believe that this is a discounted valuation. Like I said, I don't think that Ripple is available on Link2 right now, but even what Link2 was offering, I thought the valuation was at like 8 or 9 billion. The XRP that they have in escrow is worth more than that, right? I mean, to me, it is definitely undervalued. It's tough without having all of the financials in front of you to come up with a valuation on the company. But nonetheless, this is something to note that they're willing to go pay an $11 billion valuation for their company. So they're paying more than what you've been able to get it at on Link2. And the last time they did a share buyback, it was at, I think, a $15 billion valuation, if I'm not mistaken. And so I believe that they just, are taking advantage of the dip. They're taking advantage of this opportunity where, VC funding, private equity is kind of tight right now. And they're taking advantage of that to go back to, the private market. And basically they're offering their shareholders a deal. And they're buying back, it's 285 million worth of, $285 million buyback. Wrath of Kahneman sharing this. And this was actually picked up by Reuters and many other publications as well, Business Wire and a few others as well. And I just love to see Ripple's been in the conversation. XRP ETFs have been in the conversations, right? With Valkyrie, Chief Investment Officer, saying that he could see an XRP ETF coming next. This is what we love to see. So the overview of Ripple's $285 million buyback is holders can sell 6% of their stake, valuing the company at $11.3 billion. Ripple has $1 billion cash, $25 billion of crypto. And this is why I'm saying that the company is at a significant discount when they are sitting on $25 billion worth of crypto, right? 11 billion valuation seems cheap for assets in intellectual property. Absolutely. Absolutely. Escrow makes it difficult, and that's the reason why folks don't understand how to value this company, because never really in history have you had kind of a escrow like feature that needs to be included in the valuation, where it's not on Ripple's balance sheet for accounting purposes, but it definitely has to be considered because it's theirs, right? They have 100% claim to it. And so the escrow does make it difficult for, traditional finance guys when they go to value the company, and they're just trying to look at, traditional earnings, look at their intellectual property, what other assets do they have, and you have to understand how that escrow feature works. And you may even want to discount the XRP that they have in escrow, just because one would assume that they're going to be selling it at a discounted price over the counter, just like they've been doing for the past 3 years, where they've only been selling the escrow to their on-demand liquidity partners, right? And because the escrow is time locked, you might want to discount it too. It's like, just because they have 40 billion in escrow doesn't mean that they have access to it tomorrow. They only get access to 1 billion XRP on the first of every month. So it would still take until 2027, 2028 for them to even be able to get access to all of this. Now, the final point that they make is no IPO soon because of regs. And so, yeah, what we're seeing is, Ripple right now saying, well, actually, they're not really saying it. It's just kind of the rumor mill right now is suggesting that maybe they're going to go outside of the U.S. And I think that Ripple has kind of flirted with that idea, and they kind of drop it every once in a while, just as a, kind of a threat kind of to the SEC and to embarrass the SEC further. I mean, because Ripple should be the darling of Wall Street. When you look at how big of a flop the Bitcoin spot ETF should be, and I was going to pull up the clip. Gary Gensler was on CNBC today still bashing Bitcoin. So even though he voted to approve the ETF, he made sure to come on CNBC and he bashed Bitcoin today and talked about how it had no utility other than criminal activity. And I retweeted it out and I said, well, why don't we ask Gary what XRP is used for? Because he did a pretty good job at MIT of explaining XRP as a bridge currency, a neutral bridge currency, and how great of a utility that was, right? So, Ripple should be the darling of Wall Street, real utility that they're using XRP for. They're, just setting themselves up to be a behemoth of a fintech company. And it's very simple what their product is. It's the best liquidity in the world, right? The services that they're offering to institutions and banks solve real problems. The liquidity solutions that they're providing, they are responding to a problem, to liquidity flows that's literally valued in the trillions of dollars. So, we see Microsoft just surpassed Apple, actually, by the way. Microsoft just surpassed Apple to become the world's most valuable company. I really do think that Ripple is going to make give these guys a run for their money. When you look at the Magnificent Seven that has made up most of the gains for the S&P 500, I think it's not going to be long before Ripple gets added to that S&P 500, and it's going to be up there with the Magnificent Seven or the Fantastic Five or whatever it is. The folks running that S&P index fund, they're going to want to include Ripple in on that, because Ripple is set to be the darling of this whole fintech, cryptocurrency, digital asset space, especially with their IPO. I do believe it will happen in the United States. They want to work in America. They want to build here, but they're being forced to go outside. And, for me, when I see the fact that they've pulled up here, they're spending another $285 million buying back shares. That is a positive sign for us, okay? And so, like I said, I got links on down below for Link to $500 towards your first investment with them. You can get Ripple, you can get Circle here soon. And then also take a look, we got affiliates for precious metals as well. Just like these central banks are cleaning out the vaults, our community has been, doing our part to clean out our dealers and their vaults as well. So get in touch with my people. They can get metal shipped directly to you, or we can roll over a 401k retirement account. Either way, all of my community resources are available at zachrector.com. And I wanted to give a special shout out to my good friend Jay for hosting a off-ramping and it was wallets and exit ramping session that we had in our Discord last night. So another class on just crypto basic 101, but we kind of ran through the Zum wallet, we ran through Tangems. Huge shout out to Chad, another Discord member who has been bringing value to our community. And it was just a great session. I think we went for almost a couple hours. talking about wallets and off-ramping. And so if you guys want additional content, resources, and a community to get tapped in with as we navigate this next bull run, you're going to want to make sure that you understand how to, just run through, having options for storing our crypto, for off-ramping, for on-ramping, relationships with multiple banks, multiple dealers for precious metals, multiple exchanges for cryptocurrency. Getting all of this set up right now is the perfect thing to do as we gear up for this next historic bull run that we've entered for the cryptocurrency space. So although the market is down right now, this is what we expected. Our analysis remains spot on. This is why I stick to my guns, and I don't care what the haters have to say. If we're wrong, like I said, I was wrong about the spot Bitcoin ETF getting approved this week. Smash the pie in my face, that's fine. But was I right about price action? Was I right about what happened with the markets? 100%. And that's why we continue to bring you guys the best content on current events, financial markets, and how to get on the right side of the greatest transfer of wealth in world history. If you appreciate our updates, please make sure that you smash that thumbs up, drop a comment down below, and let me know what you want me to cover next. And we got more content coming your way, so make sure you subscribe to that notification bell, and I will see you guys in the next one. Have a great weekend, everyone. God bless.